Alright, so this is problem 15-5A. And so in this one, we're just going to take everything that we learned and worked through in the prior exercises and just kind of put them all together. So what this one we want to do is we're going to prepare a statement of cost of goods manufactured and an income statement for the company. And so the statement of cost of goods manufactured, and so that's everything that we're going to transfer into finished goods inventory. And so we're gonna work through our direct materials inventory and our work in process inventory to calculate that. So for the statement of cost of goods manufactured, we'll start with our work in process beginning balance, and so they give that to us here at 63,900. So now we need to add in what goes into work in process. And so from our direct materials inventory, okay, so it gives us our beginning balance of 44,250, and it tells us that we made purchases of, let's see, materials purchase right here of 556,600. So that's the total available, but then we need to subtract our ending inventory to figure what we transferred out of materials into work in process. And so the ending balance is 31,700. Let me make that a negative. So with work in process, we started with 63,900, and now we transferred in from our materials account 569,150. So what else goes to work in process besides our direct materials is we add in direct labor and overhead to get us the total amount. And so the direct labor amount is given to us at 1,100,000. And so then we just need to add in our factory overhead. And so there's going to be different kinds of overhead. There's factory overhead, which is related to our product, and then there's more just kind of general stuff, which would probably, is going to be, related to kind of maybe admin expenses, maybe stuff from the corporate office that's not directly related to our product. And so we need to separate those two between what goes into our inventory accounts and then what just hits the income statement as a selling or G&A expense. So what we want to look at is we want to look at factory overhead expenses. And so it gives us our let's see here, let's start with our factory labor of 115,000, and then so we want our depreciation expense for the factory at 80,000, and then we want our heat light expenses related to the factory, that's 53,300. And then property taxes, so here we have two property taxes. We have the factory and then the office building. The office building, that's just a G&A expense, not a product cost. So property taxes office period expense, property taxes factory overhead is a product cost, which goes into our inventory. And so that's going to be 40,000. And then the rent expense related to the factory is 27,000. And then other miscellaneous factory cost is going to be 11,000. We want supplies related to the factory 9,500, and then miscellaneous factory 400. So we have total factory overhead at 336,200. That's going to give us our total manufacturing cost during the year of 2,005,350. And so then to get our cost of good manufactured, we just need to subtract out our ending balance in work in process, which is 80,000. So we have a cost of goods manufactured of 1,989,250. Perfect. So now, let's see here, in part 2, it wants us to make an income statement for the year. And so income statements, we start with sales, and so it gives us sales of 3,850,000. And we need to calculate our cost of goods sold. And so our cost of goods sold, that's just going to be the change or what was transferred out of finished goods. So if we start with our beginning balance in finished goods of 101,200. We already calculated our cost of good manufactured, so that's what went into finished goods. And then we just need to subtract out our ending balance in finished goods to get us the cost of goods sold. One too many zeros there. So that gives us a cost of goods sold of 1,990,650. So sales minus cost of goods sold equals our gross profit of 1,859,350. And so now we just need to subtract out our period cost. And so that's going to be our office salaries expense of 318,000. Depreciation related to the office of 30,000. Our property taxes related to the office of 25,000. Our advertising expense of 400,000, and our sales salary expense of 200,000, which gives us total operating expenses of 973,000 and net income of 886,350.